Dinanath Dubhashi joins us. He represents L&T Finance Holdings and he's going to walk us through what transpired for L&T Finance Holdings for the quarter gone by. Now, the company has reported robust profit growth of nearly 100% and net interest income has seen a growth of 15%. What do you attribute to this?
Very good question, actually, and actually these results are to be looked very differently, from a very different perspective, for two important reasons. Number one reason is this quarter represents, and you remember that 3 years back, we started our journey, we put a plan for 4 years to start from bottom quartile ROE to go to top quartile ROE. These last 3 years have been not been easy. I mean, we have had various issues. The latest have been the liquidity issue, ILFS and all these things, right? Despite that, we have achieved now for this one full year top quartile ROE. That is the very, very important significance of this result. Also, how we have achieved it? Through good growth of our focus businesses. Each of our focus businesses we have gained in strength. We have maintained excellent NIMS and NIMS plus fees, with fees being more than our total operating expenses, number two. Number three, the retailization drive which we started in the last 2 years has progressed faster than what we had expected. And last but not the least, the most important thing that I am most proud of is the asset quality improvement. Against last year 8.7 and even last quarter 6.7, our GS3 is at 5.9% and NS3 is at all-time best of 2.4% with a more than 60% provision.
Any exposure that you may have to Reliance or ADAG Group or Lodha for that matter, and if so, the risks in the book and the need for provisioning that you would have to undertake?
See, whatever requires provisioning in our book, we carry adequate provisions now. You would have seen that our provision coverage is more than 60%. And if you compare it across peers, you will see that it is quite healthy, right? I think it is important to understand two things. It is important to understand how our asset quality has improved. Number one, if you see our wholesale book, okay, the entire that legacy bad book we have provided, and you would see our results in detail, our investor presentation. 1100 crores of those legacy assets have been resolved this year, and we expect that as we resolve it will, this in a GS3 in wholesale will further come down. Housing, it is pretty steady, the asset quality. The magic has happened in rural. That rural, whereas our book over last 3 years, our overall book has gone up from 7,000 crores to 25,000 crores. The GS3 has fallen not only in percentage, but actually in absolute amounts. And this has happened because of our concentration on zero DPD. As I have been always saying, that bad assets happen not at 91 days, but at 1 day. And we have concentrated so much on zero DPD that it has absolutely worked, right? Now, you talked about some of the developers. So Reliance, it's easy. It was in news. We have now zero exposure to the loan against shares of ADAG Group. You know that we were able to get out completely and recover our principal as well as interest.
Right. Your focus business grew by 17%, while your defocused business continued to see degrowth. How is it that you see your product mix changing for the next 1 to 2 years?
There are two ways I can answer this question. One is very surely the retailization will continue, right? Rural will continue a robust growth. However, definition of robust growth will be different. I mean, we have been growing at 40-50%. Obviously, it was on a lower base. Now on 25,000 crores, even a 20% growth will be 5,000 crores per year, right? And so that it will continue quite robustly. In housing, whereas you see the overall growth being subdued, our home loans has grown by 50%. Our salaried home loans have grown by 150%. We believe that we have got that equation right now. Our concentration, we are doing things right. Our concentration on direct sourcing from, without the intermediaries. Our concentration on turnaround time, trying to make the whole process paperless is working. And that's clearly where the growth is going to come from. In wholesale, our entire concentration will be on IDF, will be on renewables, will be on transmission and operating road projects. This is as far as existing products, and we will defocus from products like this promoter funding, supply chain we have sold anyway, structured finance, etc.
Sure. Margins also witnessed some amount of pressure. Your NIMS and fees stood at about 6.7% during the quarter. What's your outlook on this front going ahead? Do you think you'll be able to pass on any further rise in cost to customers?
Not at all. Actually, NIMs are up from third quarter. My NIM was 5.01. In fourth quarter, it is 5.08 after deferring 84 crores of ILFS. So, my NIMs are extremely healthy.
And your broad outlook on growth in FY 2021, how do you see loan growth and further improvement in ROEs from current levels?
Right now, what we are putting in place is a plan where we say assurance of top quartile ROE year after year. How are we going to deliver that? Whether it is next year or the year after that or the year after that, we are planning to provide an assurance that we are delivering. You know that our company is specializing in saying things first and then delivering. And we have done that over the last 3 years when situation was no good and we even didn't have a track record to show. Today we have a track record and we are using the confidence coming out of the track record to give this promise of assurance. As I said, it is going to come from the growth engines, the 4 growth engines that we described. It is going to come from the fee engine that we have put in place. That is, if you see my results carefully, you will notice that my fees account for more than my entire operating expenses. So just imagine a NBFC where the entire network cost, entire manpower cost, all costs are paid by fees itself. That is the strength we have built up. And last but not the least, the continuously improving asset quality. So whether it is 2020 or 2021 or 2022, as such going ahead, we plan to deliver a top quartile ROE, and the positioning that we would like our shareholders to have about us in mind is that of assurance.
You continue to focus on sell downs. Will this be your core strategy going forward, and how is it that you see your borrowing mix shaping up?
So, two different issues. One is sell down. So, sell down in wholesale or in real estate is a part of strategy, is a part of risk management strategy, it's of a part of capital allocation strategy. Any sell down or securitization in retail, however, will happen as tactics. That if we see some good deal here and there, we will do it, not as strategy. So that is number one, right? We have not securitized any big retail portfolio, any substantial till now at all. But the sell down of wholesale is a business model. That is how we can make money without giving capital, right? That is as far as the sell down question is concerned. Second very important question is that of funding mix. While we didn't have too much of difficulty in Q3 and Q4 because of our strength and because of our pedigree, we continued to maintain good liquidity, raise money, and if you would see, even the cost of funds has gone up just by 3 basis points between Q3 and Q4 when the overall costs were quite high.
Right. Are you also looking at some inorganic growth opportunities, and if so, what will be a broad growth strategy for the next 1 to 2 years?
Consolidation is definitely happening. We are very, very wild, very, very value conscious. We are real conjush. We are, whether it is expenses or buying, we don't go by ego, we don't go by prestige. We are very hard negotiators, real conjush. So, of course, assets keep coming, good assets keep coming, but we will be looking for the value. There are 2 things that we will look at. As always said, does it fall within our strategy? We will not buy anything just because it is cheap, and we will not buy anything unless it is cheap. So both these things are there, and we remain steadfast on that. And if it doesn't happen, it doesn't happen. We will do it organically.
On that note, then, thanks so much for joining us and sharing, the latest ongoings there at the company, earnings, outlook, and lots more. Thanks so much for joining us.